Okay, guys, thank you so much for tuning in. I am super excited for this interview today. We have Mr. Michael Zuber on the show, author of One Rental at a Time, podcast host, Financially Free by 45. And Michael lives in Fresno, California. And I actually had the pleasure of meeting Michael and hearing him speak at a conference in California about a year ago, actually, almost a year ago to this day. And my big takeaway was this guy's extremely intelligent, and I need to get him on the show.
Well, I appreciate those kind words. Just a couple of little tweaks to that. I invest in Fresno, California.
Okay.
I reside in the Bay Area, the Silicon Valley, and really, really, really recent, like the last 5 days, we've just bought a home in Las Vegas, Nevada. So
wow,
we may be changing residency here shortly.
So that might be the primary coming up.
Very likely, yes.
Okay. Congratulations on the purchase. That's awesome.
Thank you.
All right. So, Michael, let's just jump right in and let's talk about your background and kind of how you got to where you are today. I know that you exited corporate America. I did the same thing. And I know that's a bit of a wild ride, and especially when you're juggling both. So if you could just tell us about your background and your journey and how you got to where you are today, that'd be awesome.
Yeah, kind of a nutshell summary of mine is I'm probably like a lot of your viewers. I thought my answer to, retiring was climb the corporate ladder, invest in the stock market along the way. And, bingo, bango, magic at 65, I would retire. And, getting out of college, I went back and got an MBA. So, lots of schooling. It's kind of the deal, right? I did successfully turn $7,000 into $200,000 in the .com era. So I felt like a genius. Unfortunately, as is so many times the case, the quick money left and I lost, $160,000 pretty quickly.
Wow. That must have hurt.
That hurt. That was humbling.
Yeah.
But it also made me realize that doing the work matters, right? When I started doing this, $7,000, I did the work, I researched, I read financials. But when you got hot, you started not doing the work and you started, frankly, gambling. And if you gamble, the house usually wins. And I got spanked. That took me to Borders Bookstore. I'm that old, so it was a physical bookstore. I found the purple book that, a lot of us have read, Rich Dad, Poor Dad. And I'm embarrassed to admit this. I was 30 years old and didn't know a lick about rental properties. Nobody in my family had any. We didn't talk about money in my family. In my family, it was, go to school, get a good job, make a lot of money, buy nice stuff. I thought that was the American way. Rich Dad, Poor Dad set me on a new path. We started trying to invest in the Bay Area. It doesn't work. It's only appreciation, not cash flow. We found Fresno, California in 2001, bought Norris Drive in December of 2001. And the rest is history. We bought 2001, dudes, before the crash. So we got 8 properties from 2001 to about 2006. Then we 1031 at the peak of the market. So we sold all our houses at the peak, moved into apartments, and, the book One Rental at a Time kind of tells that whole journey. So that's who I am.
Now, Michael, did you sense something was coming? I mean, that isn't just luck, obviously, that you sold before everything went down. So
I knew it was. I knew it was going to be a problem. I did not expect 75%. My market, that Norris Drive property, we buy for 106. And you can look on Zillow. This is all on Zillow. 1818 Norris Drive East 93703. Go look it up. We buy it for 107. We sell it for 264. It goes all the way to 300. And then crashed to 75.
Wow.
I had no idea it would crash that low, but I knew it was bubbly, but that surprised me.
And what did you 1031 those 8 properties into?
80 units. We went to multifamily.
Wow. So you went from just 8 standalone properties right into 80?
They were 5. In the book, it goes through the details. It was like a 5, a 13, and 18. Right. Whatever the math works out. We went from 8 to 80 units in about a 9-month period.
And then what did you do during that time? Did you kind of just wait and see, or how did you get to the point of the 200 units where you're at today? Where was the majority of that growth?
Well, again, we go 8 to 80 before the drop. That was pretty significant. We took about 6 or 9 months off once the market rolled over, but we started buying early. We didn't know where it was falling. I think we started buying houses again about 150 that were 300. So we started buying about half off. The last house we bought was 28 grand. So,
wow.
we bought all the way down. We did that with private money. We paid people 10, 12% interest. We were doing Burr before Bigger Pockets wrote a book. I was writing about him on Bigger Pockets. Maybe it's where they got the idea. I don't know.
Yeah.
But yeah, we picked up a bunch of houses, and then because people don't realize housing and multifamily, they have different cycles. Once Wall Street came in and started buying houses, we started buying multifamily from banks. We added another 50 or so units in apartments from banks who foreclosed. So again, we were very active. When everybody's scared, we were active. I remember telling Olivia, because I've read 200-300 books on real estate. I said, honey, we're not going to be one of those people that say, we wish we bought more.
Mm-hmm.
We don't know if this is where, we don't know where the bottom is, granted, but we also know that these times don't come around a lot. So we bought everything we could. I took out car loans on my cars, which I always had free and clear cars. I borrowed from my 401k. I borrowed millions of dollars from friends. Yeah, dude, we bought everything we could.
Wow. And yeah, my wife and I actually just had a similar experience like that when we were in Turks and Caicos, and we've been going down there for about 20 years, and we see the appreciation and what's happening there. And we kind of had a similar moment that it's time to start to get a project going there. So I can only imagine what you went through during that time. If you were that bullish that you were even taking out car loans.
Yeah. Yeah. I mean, again, one of the biggest fears I had is I would say, I wish I bought more. So I can sit here today telling you we bought everything we could. So I feel good.
Now talk about the buy box. I from what I recall and from what I read about you and listening to the podcast that you run, you're really big on the buy box. And I think that especially as novice investors or intermediate investors that maybe have 2 or 3 different things going on, but they like to pick up properties when they can. I find this, even myself, I get very distracted, right? And I don't stick to what I should be sticking to. And then all of a sudden something looks like a deal and then I want to chase it. And I found that I've made a couple of, I'm not going to call them mistakes, but they've been learning lessons or seminars. And talk to me about the buy box. What goes into your buy box, and what should the listeners be focusing on for the buy box?
Yeah. So a buy box is frankly everything to a new investor. It's both permission to focus and a permission to ignore. So let me give you my buy box from 2001 to 2003. So for 3 years, this is all I looked at. 93703, single family homes, 3 or 4 bedrooms, 2 baths, 2-car garage, 1 story between 1,200 and 1,750 square feet. That's it.
Dialed in.
That was my search criteria for 3 years. And what that does is the daily repetition of looking at it, you learn it better than anybody else so you can identify deals. And it gives you permission to ignore all the squirrels, all the rainbows, all the butterflies of other crap that are going to distract you. Because when you're starting out, you have to compound your learning. You can't learn Cleveland and Fresno and Miami and, Dallas. It just doesn't work. You have to be laser focused.
Yeah. And I find also that a lot of people in the area where I am, which is New Jersey can be challenging to invest in just because of tax implications, real estate tax, et cetera. And then I hear people all the time that say that they want to buy out of state. And then when you dig a little deeper, they can't even identify where they want to be, why they want to be there, and what's the economic indicators that are pushing them towards there. So how would you go about telling people then to identify just even a place? Like, let's say right now they're in the Bay Area and it's really challenging with appreciation. What's the first step to remove that limiting belief that you would give somebody to really start to develop their own buy box?
Yeah. So the key to a buy box is, I believe real estate investing can be done by anyone. That's the paramount. That's the anchor that my belief is. And in order to do that, you have to practice. I relate it to a golf swing. If you've never played golf in your life, which I didn't play until I was 25, it is freaking unnatural, right? I'm a baseball player, played it my whole life. Swinging a golf club is nothing like swinging a baseball club or baseball bat. And the only way to fix that is to get in the driving range and practice every day. Eventually you figure it out. And now once you have a golf swing, you can go to any market or any golf course across the country. I tell people that are unsure of where to go is, you know what? Get a buy box in your backyard. Yes, I know you'll never invest there. It's too expensive. I don't care. Let me help you get a golf swing, i.e. learn how to invest. So get a buy box, look at it every day, document, learn average. It'll take you 90 days, 150 days, 3 to 6 months, and you will have learned how to do it. Then once you have your golf swing, you could take that knowledge to any market across the country, any market in the central, which is where most people go because it's cheap. And then you can learn that market fast. So I believe real estate investing is a skill. I believe it is best learned in your backyard. So you can go look at property. You can walk through property. You can talk to people face to face. I think going out of state because it's cheap is a recipe for disaster.
For many,
if you haven't learned how to do it yet.
All right. So now you've identified the buy box. Now I know another thing that I've heard you talk about is your 3 simple steps to building wealth. Can you walk us through your 3 steps to building wealth for everybody that hasn't gotten started or maybe they're in the beginning of their journey?
Yeah, I think anybody can get wealthy in 10 years, and it is just 3 steps. Step 1, you have to create disposable income, what I call dry powder. Net income minus expenses equals some number that you could literally light on fire and it doesn't change your life. There are only 3 ways humanly possible to increase your disposable income. 1, whack expenses. Now, it's not fun. It's not the way to grow the biggest number, but it is the fastest. Olivia and I went from spending 100% of our income to spending 50% of our income. So our disposable income grew month after, which became down payments for the next properties. 2, you can increase income. You can get a commission-based job. You can ask for a raise. You can change jobs. Did you know if you change jobs, you get on average 12% bump in salary? Or you could create a side hustle. It's never been easier to create a side hustle from something you have as a hobby or a passion. Or 3, do both. Doing both has the same thing. So that's step 1. Mm-hmm. Step 2, you have to become elite at something. You have to become an elite investor at something. You don't diversify. You don't become, I do some crypto and some stock and some real estate and some classic cars and some trading cars and some, watches. No, you have to become unbalanced and laser focused and become the best at whatever your thing is. And then the final one, you need a decade. If you do step 1 and step 2 for a decade, the chances are you will become wealthy.
That was probably the easiest, most understandable way to just create wealth in about 5 minutes. So I hope everybody was taking notes. If not, go back and listen again. Let's also talk about the turtle method. What I really like about you is you're not one of the guys that's telling people, go out, be a small little minority investor in a big 500 unit apartment complex. And Thatch talked about this a lot too, that he makes more money than most apartment syndicators, right? And I'm not knocking them, but it's just
you may not knock them. I'll knock them. I think there's a bunch of rookie syndicators that literally piled up LP money and lit it on fire. Lit it on fire. And these LPs don't know it yet. We have a perfect example. There was a general partner who raised $100 million and bought 3,200 units in Houston, Texas. 11 months later, that $100 million is gone.
Oh my God.
Gone. Lost the building.
Wow.
So I will talk shit about the new syndicators because there's a lot of them. They're going to hurt people. Bigger is not better. Grant Cardone is wrong. Bigger is better sometimes. Bigger is not always better. And there's a lot of people that are going to get burnt. That's just right. Most people, and that's who I talk to, would be much better off owning one or two themselves. And if you could buy a property and add an ADU like Thatch talks about, more power to you. So yeah, I mean, I'll talk crap about the syndicators all day long.
I'm so excited for the direction that everything is going with the ADUs. And in fact, it was just about a year ago when we were at that conference. And I remember having the conversation with a bunch of my colleagues, investor friends. This is never going to come to Jersey. You know, we need to go to Atlanta. We need to go to Vegas. We need to go to Texas and then even California. And it actually came up on the docket a couple of months ago in Jersey City, but they immediately pulled it. So, but it just goes to show you the direction that we're headed because of the housing crisis that we're in.
It's coming.
Yeah, absolutely. So let's talk to two different groups of people right now.
Sure.
What I love is just the economic insights and everything you share. One of the things that I repeat a lot is that the Fed broke housing, because I also do believe the Fed absolutely broke housing. So let's talk to two different groups. The first group would be, you have a bunch of cash sitting on the sidelines, but you're not ready to deploy it yet, or you don't know how to deploy it, but you know you need to put your money to work to build wealth. What would you do if you're that person?
Yeah, so it's funny, in my book I have an acronym for this. It's CRAP, and you can figure out what that spells. But it stands for cash rich, asset poor. Almost no one, I'm sure there's some examples, have saved their way to financial freedom. And if you have, you're probably 60 or 70 years old by then. If you want to understand getting wealthy, it's by owning assets over time. It is that simple. I actually have a shirt that says, I use inflation to get rich. Ask me how.
I love it.
Right? Own assets for a long time with fixed rate debt in an inflationary environment, and you have no chance but to get rich over time. So what I would tell somebody with a bunch of cash today that's probably nervous is, go park it somewhere and make 5%, and then get off your ass and do the work. Go get a buy box, spend 90 days, spend 6 months, and figure it out. I mean, that's what I would tell somebody with no money or lots of money. Nobody gets a pass. In fact, people with money often gamble. The process is the same whether you have $0 or $1 million. Nobody gets a pass from me. Do the work, figure out average, only write good or great deals. It's that simple.
Yeah, and the second group that I was just going to mention that I'm actually really concerned for this group is the ones that are leveraged to the eyeballs right now, that are just hoping that everything is going to be okay. What would you say to them, Michael?
Well, my hope is, and again, I talked about this, the daily financial news on what would be August 1st. We actually have a very interesting stat that I discovered this morning that I did not know. So if you are leveraged to your eyeballs and the debt is fixed, you have a chance to get out of this. As of today in the U.S., we are only 11.1% of our debt is variable. So that's kind of cool. And just so you know, in 1997, it was 28%. In 2000, it was 25%. So historically low. So good on you if you got fixed rate debt. So if you have fixed rate debt, leverage your eyeballs, inflation, wage increase, you might get out of this. Might. If you have variable rate debt, credit cards, maybe some personal loans, you got to get ahead of that, because you're probably 11, 12, 13, 14. If it's credit cards, 20, 22, 23%. That's a problem. Pay that stuff off. Go get a second job. Go get a third job. People don't know this. When I was 19 and married, I had 3 jobs and went to school.
I did the same.
Right? Today I would do a side hustle, but that didn't exist in 1990. Right? So yeah, just if you're paying 23% and paying the minimum, man, go get do something. You got to get that stuff paid off, because that's not good.
Yeah. And I even tell people the same thing, that are just right now, they're not building anything. They're not building assets, even if they have a little bit of cash. But the way that the world and the economy is going, if you don't figure out a way to get out ahead somehow, some way, you're destined for a major situation. I mean, God forbid somebody gets sick, somebody dies, or, disabled or what have you. You have no choice but to build something. And that's why I like to do these episodes, because you have such an incredible story. The one follow-up I'd like to ask to what I mentioned, how you retired early, right? At what point did you realize that, okay, it was time to leave the corporate gig and it was time to really become a full-time investor and just embrace that lifestyle?
Yeah. So my whole life, once we could retire, which for me probably was 41, 42, I told my wife, Olivia, that I was going to work till I was 50. Not because I had to, but because I wanted to. I love my job. I was very good at it. I got accolades and sales trips and made decent money and really got to call my own shots. So I was that guy and I was that good. But in my profession, every year, your sales quota changes, your management can change, your product could change. All these things could change. So I walk in the last place I was at, the sales year ended January 31st. So the new year was February 1st. I remember walking in February 2nd, which is the beginning of the new year. And there was a person at the other side of the table, which I could not stand, literally hated. In fairness, he hated me too, right? We were just like oil and water. He despised me, and probably for good reasons. I had an ego, all good. Then they gave me a product line, which I knew was dead, that couldn't be sold. And they gave me a stupid quota. So I felt like they were punishing me for having another great year. And as they're telling me what my next year is going to be like, I stop them and say, give me a package. I'm done. I'll say nice things. You say nice things. I'm out of here. So I left that day. I went to work excited. And within a 5 or 10 minute conversation, I had quit. And I was done at 45.
Wow. And this resonates with me so much, and a lot of similarities back in my telecom days, winning President's Club trips, etc. And then it got to the point where not only every year was the quota changing, every month the quota was going higher. And it got to the point, it's like, hey guys, like, are you guys just playing around with us here? And then
you just pulling these out of the sky. What's going on?
Yeah. And then we hit the quota and then they'd raise it again. And it was just like, okay, eventually this is not gonna end well.
Yeah. Yeah.
All right. Well, I know that you're short on time today. I just want to wrap up with a couple of final questions. Mm-hmm. So I want to go back to the statement about the Fed broke housing, right?
Yep.
And let's rub the crystal ball, your big brain here, your intelligence factor. How do we get out of this? I mean, what are the next 2-3 years, in your humble opinion, look like?
Yeah. And again, folks, on my website, One Rental at a Time, I have something called the 53-year spreadsheet, which actually holds the answer to this question. Most people don't like my answer because it's not dramatic. It's not a crash. It's not a boom. The only answer out of this is we need 5 to 10 years to have wage inflation, bring affordability back. There's a very good chance we are bouncing around 4 million transactions in existing home sales for years to come. That's abnormal, right? We had been over 6 million for a decade. If you go back to 1978, which is when interest rates started rising last time, we didn't get back to 1978 transactions for 11 years.
Wow.
So I don't have any great answer. The unfortunate answer is a slow grind sideways.
Do you agree though that we should be trending downward, at least with rates? I would say hopefully by Q1 of this coming year. Or what are your thoughts or bold predictions on that?
I think we should see 6% interest rates Q1. I hear some people talking 5%. I think that's crazy.
Yeah, I think that's bananas. Yeah.
But 6, yeah, I could see 6.
Yeah, and I'm personally of the belief that it's not only going to be a really rough Q4 for many, but a Q1. And I think that the biggest concern for myself personally is that all the pent up demand, even when we do go back to the low to mid 6s, that is just going to create more of an inventory crunch and put us in, a dire need of housing and inventory.
We need supply.
So, yeah.
We need supply. Everything that President Biden's talking about doing $100 billion first generational program. That's 4 million more buyers. Are you kidding me? We don't need 4 million more buyers. We need 4 million more units.
Yes. Or at least 1 million more units and sellers to get people off the fence.
Exactly.
All right. Well, I promised you that we were going to wrap by 2 p.m. my time. We're right up on the clock. How can people get in touch? Can you just plug the
Yeah.
book and drive them to whatever you have?
Everything I do is one rental at a time. Best-selling book on Amazon, PDF, Audible, whatever you'd like. I have a website, one rental at a time, where you can get the 53-year spreadsheet for free. I give it away. It's so valuable. And of course, YouTube, one rental at a time.
Awesome. Well, thank you so much, Michael. I really, really appreciate it, and look forward to seeing what plays out in the coming months.
Me too.
Thank you so much.